What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 18th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, I want to spend some time to talk about a few key things in relation to crypto. I know many of you are concerned about the current state of the market. Some of you might want me to provide some sense of perspective as to what I make of it all, and then outside of that as well, many of you might have a dozen different questions that you feel need to be answered, and I'm going to try my best to cover the majority of those key questions in this video. Okay, so we've got a lot of things to discuss, guys. I know it's been a rough time in crypto markets, but we're going to be diving into all of it today. But I want to let you all know real quick about two things. Our sponsor for today's video is eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to trade cryptocurrencies, and they also recently launched their copy trader feature, so you can copy traders on the market. You can see their performance month by month, their portfolio holdings, and also a chart of their performance. And by hitting the blue copy button, you can start trading alongside them real time at the same price. So I'd recommend, if you guys are interested, check out the link down below in the description for more information. And outside of that as well, we've got a charity event going on that I wanted to share with you guys, and this is the Alcorn Fantasy Charity event. It's the time of the year where we think about giving, guys. I know it's been a rough market, but I'm still very happy to be a part of this, and I hope you guys will partake as well in donating a little bit of money. We're basically helping to donate to a few key charities that we have down here, from Shriners Hospital to Ocean Conservancy, treesforthefuture.org, which is one of my favorites, and of course Binance Charity. So these are some of the companies, the corporate sponsors that we've had from the crypto space. You might know many of these names, and I want to go ahead and just give them a big shout out for supporting it, as well as some of the prizes that there are. So you guys can enter in this case, it could be a small donation, it could be no donation at all, but I recommend, again, just tipping in a little bit, guys. And there's some cool prizes here. Trader Cobb is giving away a few courses. TaxBit is giving some subscriptions for their tax service, and then also TrueUSD is giving away some TUSD as well. So anyways, I'm sorry, I know I don't want to hit you guys with too much stuff, but I just wanted to let you guys know about that charity event. All right, so let's go ahead and talk about this, guys. It's going to be a pretty well-sized episode here on the Data Dash channel. So let's go ahead and just talk about the current state of where we are, right? The first thing I like to do here is just to get an idea of where we are percentage-wise, right? So going from the top here, right under the $14,000 figure, down here to where we are now, we're about 53%, pushing towards 54% down in the market. Okay, now this is a severe correction. This has probably been one of the, actually it is, from my knowledge, it is the sharpest correction we've had post accumulation phase. So basically, after we've bottomed, had the 80% correction, right, in the market, and then exited out of it with a rally to get out of that range, this has been the sharpest one. Most of them have been ranging in the 30% range, some more towards 35%, some pushing more towards 40%. So bearing in mind, this has been a pretty bad correction, and I think it's gone beyond what many of us have thought was possible to any degree. I know some people out there have been calling, it's weird, it's been either people have been calling for like 10K or 9K or 8K to be the bottom back a few months ago, or some people were calling for 2,000 or 3,000, we're going to go back down here again, right? It seems to be that people are on extremes, whereas I think in reality, this is actually a very fair range to be at, and we'll talk a little bit about why that is in a moment. The first things we can, analyze from this, and I'm just going to go ahead and turn off my indicators here. Right. We have to understand, where we came from in this case. We came from a bottom here of an 80% correction from the bear market back here. Sorry, my chart is still loading. There we go. An 80% correction from the highs back in December of 2017. And that's historically accurate with what we've seen with Bitcoin for the few cycles that it's had. It usually corrects 80% after its parabolic run up. But we had a very short accumulation phase. In fact, I'll just go ahead and we're going to do not so much price range analysis. We're going to do simply date range here, right? So we actually set the bottom here, and instead of coming down and double bottoming or retesting it, we really only stayed in what would be seen as the accumulation range for about 110 days in this case, before we had the breakout on April 2nd. So you can see here, we were only down here for a matter of really a little over 3 months. Back here from December, actually about a year ago from where we are now, that'll be another point I'll mention. Back here from December to here in March, right? Again, a little bit over 3 months. So not that long. And after that, we had one of the strongest breakouts we've ever had in history for cryptocurrencies, not only in the sense of percentage exiting out of the accumulation phase, but along with that, in the sense of scale and size. Do you guys think it took the same amount of money to get from here to here than it did to get Bitcoin from 200 to 400 or 500, or the percentage equivalent of what we saw here? No. No, it didn't. It took a lot more this time around than it did last time. And that's something I don't think we take into perspective here. How much this market has evolved, how much further away we are from where we were back here. All right. We are absolutely in a much better place for cryptocurrency markets. The amount of liquidity, the amount of operations in the mining sector, the hash rate that Bitcoin has going for it right now. There's so much things going on in crypto and all the developments in the DeFi space. This is not even comparable in this case. The fact that we had such a short accumulation phase and a post rally that blew anything out of the water that we've seen in cryptocurrencies was massive. It's quite understandable to see why we would have a near 54% correction deviating from the norm, because on that general time frame, we're actually still up percentage-wise from where we were in the same time frame in the previous cycle, from bottom to the point where, if we were to take this exact date range in this case, we're at still a higher percentage rate, right? It's hard to sometimes focus on the gains that you have in a market when you see a correction like this, when you take a look at certain perspectives on the chart. But in reality, if you want to know the percentage return here, of course it's going to be red, but in this case, we're up about 118% from the bottom. We're trading at the same range we were at back here in June of 2018 or back here in November of 2017. If you want to know, Bitcoin's profitability has been pretty much, if you buy Bitcoin, I think we can even take a look at the model later on in the video as we have looking at Bitcoin up here in just a moment. One of the data models that they have is the days of profitability, and it's like 88% of Bitcoin's history is profitable. So if you bought in, you're either, at the current position that you bought it, or you're up on your money, right? And that's how Bitcoin works. It's cyclical. And Bitcoin tends to have these rallies and corrections before it gets back up to the previous highs and continues forward, okay? So I don't want to keep rambling, guys. I wanted to do some general kind of price analysis here. Talk about some of those key things, right? We're still way up for the year. We've more than doubled Bitcoin's price. Market valuations are sitting slightly below overall on cryptocurrencies at a double on valuations. So we've actually, a year from now, right? I mean, we're now here on the 18th, right? We're in a much better place than where we were. Pretty much, this is where we were bottoming last year. And now we're at more than double the value for Bitcoin. So it's just something to keep in perspective, right? Now, I want to talk about this tweet here. This is really going to set the stage here for what I want to talk about and focus in on this video, because I don't think a lot of people really get this. And it's not something to be rude to you guys, right? It's because there's a lot of noise in crypto. There's a lot of people who focus on the short term. There are a lot of people who aren't here for the long term. And I know most of you in there are in for the long term. So you should be looking and focusing in on people who have been in the space for a while, or at least understand how markets work, okay? There are a lot of traders and talkers in this space who do not care about cryptocurrencies, who do not have any interest in understanding the basic concepts of how markets work. All right. I'm sorry to say that. I just want to make that very clear. I've seen this through Twitter. You don't get much substance. Well, here's something I think that will help a lot of people. And again, you may disagree with me on this because there is going to be a counter argument, and I will mention that counter argument. Okay. But we need to understand the general kind of thesis here. All right. So I put out a tweet saying, for those who are worried, remember this. Markets are simply about inflows and outflows. And again, I know many of you out there who are avid fans already know about this, but for those who don't, inflows and outflows is either more cash in or more cash out. Where's the pressure coming in, right? Is there more buyers who want to buy Bitcoin and get in now, or are there more people who are looking to get out of their positions right now, right? So this is buyers and sellers. It is on the sell side as well, miners, all kinds of different things that are causing sell side pressure. We talked about this in one of my videos that I did, why the halving isn't priced in, right? So this was just one application of really kind of talking about the halving event in this case. But there's a lot of things we have to consider when we're talking about inflows and outflows. So we have the halving event. This is going to be massive. This is going to mean that the new daily issuance of Bitcoin is going to be cut in half. So as we talked about in this video, we're talking about, originally what was about $13.5 million of sell-side pressure is going to turn into $6.75 million if prices were to hang around that range in this case, right? No matter what price it is, the daily new issuance of Bitcoin drops in half. Therefore, the sell-side pressure drops in half from the miners in this case, because miners are always selling, in most cases, the Bitcoin that they're mining. I know many of us would say you should just hold it, but that's not how miners work. They have operational costs. They're selling it instantly. They're trying to make a thin margin when they operate, so they're selling it. It's happening continuously every day. So when the halving cuts, that's going to reduce some of the sell side pressure. There's also been something that a few other people have been pointing to, and this is what's known as the plus token Ponzi scheme. It was a Chinese scam, or a Chinese Ponzi scheme in this case, that suckered a bunch of people out of their Bitcoin and Ethereum. It took pretty much 1% of the entire Bitcoin supply, hundreds of thousands of Ethereum, and they've been selling that wherever they can on the market, and it's been causing a general sell side pressure as well. So when that stops, you remove sell side pressure. You remove that 1% of the Bitcoin supply that's not being sold off anymore. You also remove the hundreds of thousands of Ethereum that aren't being sold anymore. And the third thing I want to talk about is institutional on-ramps becoming available, right? I know some people, again, have disagreeing opinions on what institutions, whether or not institutions are interested in crypto and what types of institutions. It's kind of generic to just say institutions. There are commercial banks. There are hedge funds. There are all kinds of different facets. There's family funds. There's people's pension funds. What kind of institutions or institutional capital are we talking about? Right? And I would say when I say institutions, I'm talking about not only your pension funds in this case, where there are pension fund managers who are going to manage and delegate some of your retirement accounts to something like cryptocurrencies, maybe something like a fraction of a percentage or a percentage, which would be huge for Bitcoin. But along with that as well, all kinds of different institutional on-ramps for larger scale traders on Wall Street to actually get a piece of the action in cryptocurrencies. Okay? So all those things in combination, in my opinion, will lead to a massive reversal. And it's going to happen quite quickly when these things start to shift, because it's a game of supply and demand. It is buyers and sellers. When the halving reduces the daily issuance of new Bitcoin, when Plus Token thins out its available Bitcoin that it can sell on the market to take home the profit from the Ponzi that it ran. Again, this was just it was a terrible thing that happened in China. And when institutional on-ramps come in, and we already maintain some of the buy-side pressure that we have, then the inflows start to outweigh the outflows, and market orders start to favor the buy side. Price starts going up. This is how markets work. It's what leads to differences in price. Now, I want to go ahead and make one very clear case, and this is what I was referring to earlier. Some people will argue, okay, Nick, you're talking about this measurement of inflows and outflows. What if we can't maintain the buy-side demand? That's a very fair point. If we can't, Bitcoin is going to go down. 100%. It's the only thing that can keep price up is new buyers in this case. That's any market. That's not a Ponzi. That's just generally any market. That's stocks, that's commodities, that's any market, as well as cryptocurrencies. So, but I want to make something very clear here. If that's the only fear here that we have to keep in mind, the only kind of concern on the other side is what if we can't keep up the buy side demand? Well, let's just assess the risk and the probability of this. So we're going to estimate that as we're cutting the sell side pressure in half, that we have this huge dumper on the market in this case that's not going to be dumping anymore. And we also will have new institutional on-ramps that we won't be able, we're going to basically have a 50% reduction in this case, or more in buy-side demand. So 50% of the people who are buying on a daily basis, the $13.5 million that's required right now to sustain price, it's going to go down to 7 or 6 million in this case. I don't really think that's the case, guys. I don't think that we're seeing so much in the broader trend here is that throughout these cycles, we're not seeing a decline in buy-side demand. If that's the only risk I'm taking into account, I'm willing to take it. I mean, there is serious interest across the board for some exposure to cryptocurrencies. Maybe not in retail investors right now, because quite frankly, retail investors like to buy when things are trending, and it will come. But the major thing here is that we just need to maintain some sense of buy-side pressure here. And especially as prices get lower, smart money tends to come in, right? So again, I would say to the bears, they have a fair case in that case. Right? They have a fair case in that case. They have a fair point, right? If buy-side demand doesn't, the halving, if buy-side does not maintain itself, the halving will almost be a near non-event in this case. Or price will push sideways for a while because inflows and outflows will be relatively neutral. Right? But the moment that someone does come in buying big and the buy side starts to outweigh it, it could come later. Eventually, we'll see it come into play. And that's exactly what happens with the stock to flow model. It's exactly what happened back here, right? So we started to have the halving event back here in 2016. And notice how price, though it took some time, started to see that change of inflows and outflows, and price started to come back. And it came back strong. From the previous highs, over a 20x in Bitcoin's price. From the lows down here, You do the math there. Massive moves. Over 100x from the lows. So my point here is we take a look across these models. We can see here, according to the data science model, we're on par for where we should be. We're coiling around the stock to flow model. If you take a look at the MVRV Z-score, right? We tend to have a correction in both periods of time. This one a little bit more severe because, again, we had one of the biggest breakouts here that we've seen in the past, right? This one was higher than all the previous ones. We went to 2.6 rather than the historical 2.1 range. And along with that as well, we've got a ton of other data science models that I recommend you guys take a look through. Most of them are saying that we're not in a bullish phase right now, and nor are we really at a bearish phase. We're just pretty much where we should be. And that's a good thing to see, right? To understand here that right now we've got a lot of sell side pressure in the market, that a lot of it isn't going to last forever, and that when those inflows outweigh the outflows, if they do, then we're going to see upward price momentum. There's no technical analysis, no crazy, biased viewpoint that you can have on that. That's how markets work, right? Those things like the halving are guaranteed. Plus token will eventually either stop selling their position or they're going to run out of it. All those things are things that we can guarantee. Now, in the case of institutional on-ramps, you could agree or disagree that institutions are going to trade cryptocurrencies. I'll leave that up to you guys. I think it's just an additional thing to consider, but it's not 100% relevant. What we're focusing on is the guaranteed things that we know. And if we know that the sell side pressure is going to start faltering, especially when price is this low, I can tell you all, I'm pretty confident that in the next few months, we're going to be in a much different market. Now, I want to go ahead and answer some of those key questions that you guys have, right? I think that ends off a good note from my perspective, and you guys might already know generally my thesis on markets. You guys are here now. I want to go ahead and spend some time to answer your questions. First off, a lot of you out there in the crypto space, and this is just a continuous thing I have to always mention in this case, because there's always new people coming to the space. It's nothing wrong, and I don't mind mentioning it. A lot of people out there are saying, Nick, I got in at 9, 6, 8,000, 7,000, and Bitcoin's down to where it is now. What should I do? Well, I can't tell you guys what to do, but I would say that if you feel you can't handle these kind of swings, or if you don't like seeing this where you could be buying it at a certain price and it's down 10, 20, 30%, I would like to say two things. First off, you're in crypto markets. This is normal. Take a look at any of the price history, right? We're just taking a look at Coinbase, so we don't have all the price history here. But you take a look back at some of the longer term charts on Bitstamp or the BLX indicator, and you'll see, right? Oops, sorry, wrong one. You'll take a look here at the BLX indicator, and you'll see that Bitcoin has done this throughout history, right? This is very common to have these major swings, right? But second off, I'd say it sounds, in a sense, that you guys might be taking on too much risk. You might have either too much money exposed or you don't have stops set, right? I have nothing wrong with setting stops. I personally don't want to because my trade here is not in the short term. I'm not looking to make money in 3 months. I'm looking to trade this into 2021, and I don't want a stop to trigger me out of that position in that case, and I've decided to just simply average in when we get to lower levels like this, right? That's just how I go about it. But for those of you who are concerned that you might be taking on too much risk, that you don't want to take this potential loss, follow my videos that I have on my channel. I have my trading tip series on how to set, well, not only just generally how to trade in that sense, but we do talk about stops on the channel. Setting stops is a very key principle, right? And there's a ton of videos out there outside of just myself, but all exchanges offer these abilities for those who are more active traders or those who want to mitigate the risk, right? Again, I'm a macro trader. I trade cycles. As long as this is trading in the longer term band here, and it's trading for an exponential run up where it's multiplying 5, 10, 15, 20x, that's what I care about. I don't want to stress over it. It's just how I trade. I'm a macro trader, a swing trader, whatever you want to label it as. For those of you who are feeling you're taking on too much risk, set stops. Please set stops, guys. Don't just blindly follow what I say. Don't follow my style because it may not fit yours. But I'll say this in summary. The last thing I'd like to say, in the sense of people who are scared or worried about cryptocurrencies as an asset class, I want you to cut out all your personal love for cryptocurrencies, all the personal relation that you might have to the technology, all the things that you might love about cryptocurrencies. And I just want to go ahead and talk about something very key here. Crypto is a market like anything else. It is going to have emotional peaks and bottoms. And the thing that I would always say here, to just be 100% real with you guys, is you can either end up being dumb money or smart money. Smart money does not think with emotions. I don't care if the market is in a bloody territory or if we're going to the moon, as everyone says. And I'll give you a good analogy. I think that is so annoying when people talk about, oh, moon, wind Lambo. No, I hate that stuff because it's childish. It's not what cryptocurrency is about. And it's also not how a trader talks. That's how a rampant speculator talks. I'm here to make money in my investments. I'm here to support something I believe in. I'm here to hedge my wealth in the best place I know possible. Because I know that cryptocurrency is an emerging asset class. I know that this is something unheard of compared to what's traditional in the financial sector. And I know that this is a very small market cap asset that, in my opinion, has a lot of room to grow. You might disagree. You might view it in a different viewpoint. But I know my time frames. I know my price targets. I know my risk. That's how a smart trader walks into the equation. If you don't know those things, if you don't know what Bitcoin is, if you don't know why you're invested in it, and you don't know how long or what kind of return you're expecting from it, and how much risk you're willing to take, then you need to spend some time reassessing that. And I'm sorry if I sound like I'm being kind of hawkish, guys, but I want the best for you, right? And I can't tell you what to do with your investments legally, and then also along with that as well, I don't want to be your financial advisor. I want you guys to have the independence to make your own decisions. And I know a lot of people are conflicted right now, but spend that time to reflect. If crypto isn't for you, if you can't handle this, then you got to do either one of two things. You might have to close your position, or if you do believe crypto is for you and you can't handle these swings, you got to look away from the chart. You got to have your position, step away from the chart. That's actually very healthy for a lot of people. And I think what I always say, for some of the markets that I've invested in more long term, outside of just cryptocurrencies, I've been in investments for a very long period of time, and I look back on it and I go, wow, I was scared when we were at that price. I was worried that it was over back then, and look at where we're at now. I think we'll look back at this moment in time in crypto markets here, in this time of peak fear, very similar to the nature of where we were back in December of 2018. And I think we're going to look back and say, wow, it was a blip in history, and Bitcoin's in a much better place. I could be wrong, but who knows? We'll see. Time will tell. And I hope you guys are having a great day wherever you are. I know it's not a fantastic time in the market, but I'm always going to be here for you guys through good times and bad. I love this space with a burning passion. I'm building my own startups in relation to the cryptocurrency space that I can't wait to share with you guys. I want to contribute to this space, and I hope you guys will as well, to make this asset class what we know it can be, and that is the censorship-resistant, permissionless asset class that is going to help us not only hedge against the mismanagement of central banks and corrupt governments, but along with that as well, take back our financial freedom in the long term. All right? I hope you guys are having a great day wherever you are. This is Nicholas Merton from Data Dash, and I'll see you all in the next video. Stay tuned.